Good morning, good morning. Welcome everyone to the tradingsyndicate.org. I'm JJ, vwaptrader1 on X. Good to have you folks with us this morning. Boy, and this market is just, I mean, when I was manipulating penny stocks, I would have dreams of rigging a stock the way this market is trading. It's beautiful. Overnight inventory is long. It's starting to correct a little bit now. Let's go take a look. We'll go over that. Let's watch the. I'm going to jump into this because I took a little short. Excuse me. Excuse me. Oh, man. I took a little short just when, because I saw a seller on the chart. I saw these sellers just under 89. So I got short 87 and 86 and a half, and I've just covered them here at 84 and 83 and a three quarters. Just a couple of micros. Because that's the first time I saw a seller, so I shorted the backfill. Right. Another place, if you're still short, you're looking for the previous day high as your next target. And VWAP. Now, I know you guys are asking me, JJ, you say don't short. I say it's okay to short the backfill. Right? You can short the backfill when inventory is long. That's normal business. Right? So let me talk a little bit about shorting because I know people are getting destroyed. You know, this is a market that brings out the worst in people, um, and it brings out their worst habits. What you really want to do is if you're having trouble, and I'll say this real quick, because sometimes I get disturbing messages from people. If you're having trouble controlling yourself, or you think that you might have a gambling problem, please go and seek professional help. And if you want us to help you out, maybe reach out. We'll be happy to try and find someone to help you. Okay, now having said that, this kind of market does that to people. Let's talk about you are going to how are you going to do business over the next couple of days, right? We got a Fed meeting tomorrow. Contracts now rolled over, right? Let's go take a look and see what the volume is, right? If you go and look at, the old contract has now been surpassed by the new one in volume, right? There's still a little bit of trading in the old one as people still roll over, but pretty much, yeah, pretty much done. We're adjusting inventory down. We're looking for VWAP. Now, let me give you a sort of, let me ask you a question. Okay. First of all, first question. When you miss a move, do you guys get upset? Like if you miss a move to the upside, like we just had, like a move from 66.76 to 88, you get upset. Okay, good, good, good. Now, when you do get upset, because most people I talk to do, right? That's one thing in retail trading. I notice a lot of people get upset when they miss the move, right? But here's here's what I'm interested in. See, I figured out why so many people short and get trapped short is because they miss that up move and they want to grab something and they think that the elevator has gone up and now it's going to come back down. But what they don't realize is that in this building, the elevator goes up and then it goes sideways before it comes back down, right? I think that's everyone, Mike. I've done it. Let he is who is without sin cast the first stone, right? I've done it, right? And I think that is what we can call a revenge short. Because you miss the move and you want to squeeze some money out of it. You think the move can't go any higher. But what this market does is because of market structure, and I'll get into that later. Oh no, what did I do to my chart? No! Is there any way you can reset these charts? Oh, there we go. Thank you. Whew. If you miss the move up and it goes sideways, check this out. Here's a little tip. Look for that seller. Okay? Now, don't automatically go in short. Once the market shows you a seller, right, you could clearly see that there is a seller in this market, right? Because it moved up and you want to short it, right? And what happens is you short it, you miss this, right? So you short it here and then you get stopped out, right? You guys still with me? See, what I'm trying to do when I talk to you guys like this is I'm trying to determine whether I've either had way too much coffee or if I'm making sense. It could be one of two things. Because I've got this really strong Italian coffee. So I need you guys to kind of like give me some feedback, right? As I walk through this, because I'm a sincere believer that if you pay attention and you reason your way through things, you can understand how to take better trades, right? So you miss this move, right? You hit it here, you get stopped out, then you go long, then you get stopped out, then you go short, then you get stopped out. Sound familiar? Okay. How about we do this? When you know a market's kind of slow, right? Especially at all-time highs like we are, right? The market's going to go up and then it's going to distribute. This is distribution. But you can see very clearly that the sellers are engaging at 88 and 3/4, right? Okay, so that is number one if you want to short. You found a seller, okay? Now you wait for the sellers to compete. And my suggestion is you enter your short here. You give up this little bit of real estate here, right? For confirmation that the offer has moved lower. Now what that does is that gives you options. So if you're shorting in this area here and the market gets lifted up back in between 88 and 88 and 3/4. Now this is your sort of danger zone. Remember Top Gun? This is your out. So this way, if you're shorting any kind of size, you can manage your size in this area using this as your out. Because there's no reason for you to be short 10 contracts at 87 and a half, 87, and the market trading at 90.5. That just doesn't make any sense, right? There's no business sense in that, right? For longs, look below and fail of 85 right now. All right, you'll be targeting this here, probably 87, 88, because that's where your sellers are here, okay? So when you identify a seller, right, since it's slow, let me take you back in time, right? So a trader next to me gets an order to sell 2 million shares of a stock, right? And if you and that trader are on good relationship, right, you know, your buddies, your drinking pals, you look at him and you go, can I sell alongside? He's got a 2 million share sell order here. So you sell with him. You maybe sell 5, 10,000 shares short, right? He's selling, and he's pushing the market lower. You can cover. Now you buy beers that night, right? Very simple. But this concept, now we do it with the chart instead of having a friend on the desk. When you see that seller, you're like, can I sell alongside? And you sell alongside that seller. When that seller stops selling, guess what? That's when you buy it back. Does this make any kind of sense to you guys? Because for me, this is like breathing, right? So one thing I'm trying to do is trying to help people. For me, this is like breathing because this is what I was taught to do from a very young age, right? You've got to remember, I've been in the market since 1993, right? So, and there was no charting software when I was trading. So everything had to be practical, right? You do this, then you do that, then you do this, then you do that. There's no computer telling you whether you just have price telling you, right? If the thing's moving down, great. If it's not moving down, get the hell out, right? You know, like, and when the trade starts going bad, you know, like those horror movies when when that family, they buy like, it's like a $20 million mansion and they get it for like 150 grand, right? And they're there the first night and the house goes, get out. They're like, well, maybe we'll redo the kitchen. Get out. You know, maybe this wallpaper needs. No, when you're in a bad trade, pretend you're in a haunted house and run. Right? When in doubt, get the F out. Right? Because you don't have the capital to screw around with. Right? So does it help going, can I sell alongside? Because you guys, everybody wants to short when they miss the long move, right? Everybody does, right? Every one of you guys I've talked to, right? How about try and reframe it in your head and wait for a seller? You got to watch, John. You know, all that stuff that we talk about, you got to watch the videos. You got to do all that stuff, man. Now is like, you know what to do. All you got to do now is put in the work. Now is the horrible part of sitting and watching markets and not executing and actually learning. It sucks. It's horrible. You're not making any money. Welcome to finance. right? The problem with us is we have to do everything by ourselves. We don't. If you went and worked at a brokerage firm, they'd give you a paycheck for the first 3 months, and then they pull your check, and then they're well, big firms don't. They give you a salary, but in the old days, you'd get paid for 3 months, and then you better start freaking hunting, right? So you don't really have any choice, right? So with us, it's different because you're not bringing in commissions. What you're doing is you're trying to be tactical about this stuff, and you have no idea what the hell you're doing, right? And then to make matters worse, you people go on the internet and they get all sorts of useless information which clogs up their head. So what I'm trying to do, right, is we go through this scenario every day, John. Every single day we go through this scenario where I show you guys where the sellers are, right? The sellers initiate at the top of the candle, right? Sometimes it's going to be a distribution and then it's going to retest, it's going to screw around. But what you got to do is you got to be able to learn how to pick apart scenarios, right? It's not going to do the same thing every time. And that's why trading retail is really difficult because the order flow changes, the agenda changes. Right now we're at all-time highs. We are going through a very strange period in these markets right now where the the supply, the floating supply in these companies is so locked up that it's creating a supply shortage, right? The ES is based on these companies, right? Did anybody happen to look at Tesla yesterday? Anyone? Anybody look at Oracle a couple of days ago? Right? I was looking at Microsoft. Yeah, 420, right, Johnny? What a that guy's nuts, man. He's just nuts. He's a character. He's like P.T. Barnum, and Vanderbilt all rolled up into one. But look look at Microsoft. When I think of Microsoft, I used to trade it at $40 a share on the desk. It's $500 a share now, right? These markets are different. This is going to be the most challenging time for a retail trader to learn how to trade because the markets are the most automated they've ever been, and they're getting even more so automated. There's no human emotion in the chart. It's all just pure business. And you guys are all pure emotion. See, that's the yin and the yang of it. You guys are all pure emotion. The chart is all business, right? That's that's the problem. So now you've got to change your thinking, right? So distribution, you see a seller. When you see the seller, can I sell alongside? If that seller goes away, you cover your short. So say you were short at 87 and a half, 87, and the market goes up to 88, 88 and a half, then already mentally you know that this is not working. So you're mentally prepared to take the business expense. The loss is a business expense, right? Letter K, back one. So once you're mentally prepared to take the loss, right, that is a business loss. It's an expense in business. Take the loss and get out, right? If you get stopped out at 89, great. That's business. There are expenses in business. There's no business where there are no expenses, right? There are costs to do business. Your cost to do business in retail trading is getting stopped out. So the stop is insurance on your account. It also tells you maybe you're in too early. Maybe, this is just not the right trade at this time. Either way, you're protected because you are insured against. This is the only business where you can engage in a business transaction and insure that transaction, where you get some of your capital back. Think about it, folks. How many of you invested in somebody's restaurant? You don't get nothing back, right? You go do some sort of an investment. Here at least you get some of your capital back. Right? That is what your stop is there for. And it also gives you information on the flow of business at the time. Right? So when you're shorting, what's the lesson of the morning? Find a seller. If there is no seller, right, there's no short. How do you find a seller? Look at that line where I drew sellers, right? It's not that hard. Don't overthink it. Seller, 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 seller. They're selling here. You gotta spend some time and watch and make notes and be active in watching. You gotta pay attention, right? You have to pay attention. It you must pay attention. If you can't pay attention, focus on your concentration skills. You know, it's the only way, because that's what we do. That's what real traders do. You look and you watch for when people are trapped. You watch for people when people are scared. You watch for when people are greedy. And then you herd them into a corner and you slaughter them and you take advantage of it. Then after you've cashed up, then you go about your business, right? You look for where people get themselves in trouble. Poor lows, poor highs, right? Trap shorts, trap longs, right? Your financial well-being comes from other people's mistakes. You do not have to look at the DOM. It's a waste of time. Let me ask you a question, Amiri. If I could tell you that you could only have to look at one chart when you're trading, and your life would be simple, and you could start out by learning how to make $50 to $100 a day, and then scale that up to 5, 10 grand a day over time. And you only have to look at one chart, do things one way, have a simple life. Is that something you would be interested in? Or are you the energy drink, cocaine crowd that needs to be visually stimulated all the time? Right? I like looking at one thing, making my money, and then going away. I don't want to sit, I don't need visual stimulation, right? The more stuff you look at, really, the worse you're going to trade. The candle chart right now is telling you exactly what's going on in the business, right? The problem is candle charts have been bastardized with all of this pattern stuff, but nobody tells you what the business is that creates the pattern, right? All these years I finally have been able to to say it, and to be able to express it. Why would you learn patterns? Why wouldn't you just learn the business that creates the pattern and then trade the business? Why the hell are you memorizing patterns when you have no idea what the underlying business is doing? That'd be like me going into any kind of business and not knowing anything about the business, right? It's like, I want to sell tires. Do you know anything about tires? No. Do you even know how to change a tire on a car? No. Right? I want to be a doctor. Have you taken human anatomy? No. It's like, learn the business. Sorry for the rant. Right? Right now, the business is saying business is slow. right? You got trap shorts underneath yesterday's high. They keep bidding that 66.83 area, so every time we come down there, we stop. I'm looking for lower, but it's going to take time for these buyers to get tired versus if it can stay above 83 for the next few hours, it's going to run back up. No problem, Jerry. Talk to you in a bit. So that's what's going on now because here's the deal. If you were a large trader and tomorrow was a Fed day, right? And you don't know what the Fed's going to do because your uncle is not Jerome Powell. Wouldn't you want to lighten up your inventory? Say you were long 10,000 contracts. Wouldn't you want to get rid of maybe 7 or 8,000 of them before a Fed decision, just in case they don't lower interest rates? Does any of this stuff make sense to you? Why would you want to go in full pull position into a risk event? That's not how people who manage money, they don't manage money like crackheads, right? There's something called, they have a fiduciary responsibility to their clients, right? They have a role of also being a gatekeeper, so they don't make stupid decisions like they're Tony Montana, right? So they're not going to go full pull into a high risk event. They will use this opportunity of record high prices to get rid of a little inventory, right? I don't know, trade maker. This situation that we are looking at right now this is sort of a new situation. I've never seen a prolonged short squeeze like this into a Fed meeting. So I I'm very, very careful, right? That's why you see me hesitating because usually all it takes is one event. Like what, for example, right? For example, let's look at this market. What if they don't lower interest rates tomorrow? What if they don't, right? This thing's going to come back down into this area here, right? We will drop from the high 6600s down to 6540 easily because there's no structure here, right? This is like a house of cards. This is like stilts, right? There's no market structure there's no trading range here that's going to cushion this blow and no range here that's going to cushion that blow, right? If this breaks, right, we're looking for that spike base here. There's a position here, right? Who knows, Raj, what they're going to do, right? I'm just saying that the structure going up here, this one time framing, that's not stable, right? So I don't. That's why a lot of people, if they drop rates, will they sell the news? If they do this, will they do that? What you need to do as a retail trader is just sit out and watch, and then trade the aftermath, right? Because let's face it, you're not sitting at a hedge fund with 800 million under management. You're sitting there with a retail account of a couple of grand. So it doesn't really matter. Just let them do whatever the hell they're going to do and then trade. Does that make sense? Right? It's just a question of get practical, right? Get profitable, right? Get practical, get paid, right? Let's use practical information so we don't have all this pie in the sky, this and the dot plot and the snot plot and this. Who cares? You guys are day traders, right? Try and make your 500 bucks so you can pay your electric bill, right? That's what I care about. I care about helping people make money so they can pay their bills, right? That's all I want you guys to do. I don't want you guys on CNBC, right? right? Yeah, exactly, right? So what do we care what they do, right? Sure, it's interesting, but don't trade interesting, right? Don't trade interesting, don't trade news, don't trade all that crap. Trade your business. When your business hits, do business and then get out, right? Look below and fail. Look above and fail. Keep it simple, right? You want to short a market. Is there a seller? Great. Sell alongside that seller. When they stop selling, cover. It's not rocket science, right? We're not doing cold fusion here, right? These markets have been around for thousands of years, right? Get practical, get paid. Thanks, everyone. We'll see you at 9 o'clock. Remember, if it's not practical information, throw it out. Throw it out, right? Oh, I'm not done. I thought I was done. God, it feels like I've been talking for an hour. You guys must be bored out of your minds. But I'm getting very, very strange messages in this market again, right? I'm getting very strange messages from people. So that's why I'm preachy, because people are starting to go a little nuts. Sorry, Johnny, I thought it was 8:30, but it's not. Right? People are people when markets get like this and the trading is is difficult, people get a little squirrely, right? They get a little nuts, right? And they start over trading or freaking out or trying to figure out if the sun is going to shine and what the wind's going to do the next day. They start losing it, right? These are not normal business conditions that we are facing right now, right? So you got to really really watch your mental space in the next couple of days. Don't let your mind play tricks on you. Yeah, sometimes it doesn't work, Johnny. You know why it doesn't work? Because we have no business being in there at certain times, right? The simple reason that you're not making money a lot of times is you're doing business at the wrong time. And when you're doing business at the wrong time, it's a massive pain in the ass because all you're doing is you're getting in the way of people who are doing business and you're just getting run over because you're not supposed to be in there, right? That's all it is. You just stuck your nose in the wrong place at the wrong time, right? And we don't realize that. We don't realize that. Because how could you realize when not to stick your nose in other people's business if you don't know anything about the business? Right? Look below and fail of 85. Right? London is not correcting inventory lower. It tried, took the low of K by one tick, and then turned. So we still have bids, my friends. We still have bids. Right? If you're buying the 85s, I'd say your stop is around 84 half. But I would wait until the market gets above 85. We've got sellers. You're going to have sellers here. And obviously you have sellers here right now. See? Seller, seller. It's not rocket science. Map out where the sellers are and trade accordingly. Right? So if you were long and you know there's a seller at 85 and 3/4, what are you going to do? Hmm? What are you going to do? Reminds me of the time we were stuck in the Pierre Hotel with this crazed, drunken Texas oil man who was trying to get us to come work for him instead of being traders. And he kept screaming, "What are you going to do?" I thought he was going to pull out a gun. What are you going to do? You have to figure out what you're going to do in this market. Are you going to act like a professional? Or are you just going to abandon all reasoning? You can learn a lot in this market. And trust me, you're living through history right now. Markets have never traded like this, ever, ever, ever. The supply of large cap companies has never been so locked up and concentrated like it is now, right? There's never been as much speculative money in Wall Street as there is now. These are historic times. And you're trying to learn how to trade and make money during them. That's difficult. But don't worry, this will pass, right? Be long-term greedy, my friends, right? People say patient. I say be long-term greedy. Think a year, 2, 3, 4 years down the road. The things you learn now will really, really, in a few years, when you actually get it, right? Once you're on the train and the train is moving, what you pick up now will be invaluable. You just don't realize it because you guys don't know what the hell's going on, right? But there is a quantum shift in markets coming, right? Right? Think long-term greedy, right? Right? Be long-term greedy. Don't worry about the news. Don't worry about the market conditions right now. Make your money, right? So you can sit around and you can worry. And I understand what you're saying, Harry, but it's not going to help keep the light bill on, right? You learn your setup, right? Learn to spot when there are sellers. Learn to spot when the sellers stop selling, right? How much we bid at 82, 83 right now? The gap did not close on the new contract chart, Raj. There is a couple of ticks here of a gap. Apparently it closed on the old contract, but I didn't look. Right? There's still a short bid. Here it is. Right? Look. It's right here. Here's VWAP. They're front running VWAP. There's all unfilled buy orders here. That's why the market hits this area and moves up off of it. Keep it simple. Right? Now, would you trade this? How are you going to trade this? Right? Scalping this is difficult because there's a seller at 85 and three quarters, 85 half, right? So you'd have to be really good with your long at 84, 83, and then sell 85. It's tight. The risk isn't worth it. What you could do is if you have a view long, is you could build a long position between 83 and a half and 85. And then as soon as it breaks 86, you're a seller, right? You're on the offer. Okay? You could build a short position and your out would be 86 and a half, right? Now, if you're building a short position, you'd have to be putting bids down at 81 and a quarter because that's where the buyers are going to be and they're going to front run you. So maybe you have to bid up. But for scalping right now, this is crap, right? So the only way that you can trade out of this is to do a position trade. Now, position trading is okay, but what do you need to position trade? What are the tools? Well, one tool is an account where you can actually afford the business expense of cutting contracts if you're wrong. Because you have to manage your risk with size. And if you don't have a large account, you cannot manage your risk with size. The other thing you need is the skill to manage your risk with size. So, are you a trader when things start going wrong? Do you add to positions, hoping and praying? Or do you systematically cut risk without thinking? Have you trained yourself to systematically cut risk? Huh? That is skill, right? That's a skill you need to develop. You can't, you can't start adding contracts and freaking out and getting mad. You have to act like a business person, right? So, could you imagine if you were working at a large business? Say you're like in the boardroom at General Motors or in the boardroom of frickin' IBM or one of those old companies, and you tilted and went screaming around the boardroom and took off all your clothes and went running around naked in the boardroom, which is basically what traders do when they tilt. You can't, that's not tolerated, right? So you can see there is a distribution here. It's like 83.5 to 85.5, right? What are they doing, right? So I would wait until it breaks one way or another. When it's going back and forth between the green and the purple zone, for me, that means just chill out and wait. Have a coffee, relax, right? You're waiting for that opportunity where, like, I had that one trade when we saw the sellers at 89, 88, 87 down to 85, 84. Good enough. Thank you. Now I'm perfectly happy waiting 3, 4, 5 hours from now to the next trade. I could care less, right? Try and think about these things so you're aware. Try and be aware of yourself when you're trading, right? Sometimes you'll hear me go, "Oh man, I'm over trading," or "I've traded too much," or "Oh, I've got no discipline." Or you'll hear me like when I'm trading, I'll make comments about myself. That's me checking myself, right? That's something that you guys should do. Otherwise, you completely lose sight of yourself, right? You have to have checks and balances. Hope this stuff is helping you guys. You're very quiet. But try to help you guys learn how to think, right? So, say you're building a little position here, put some offers out. The offers will let you know if the trade is actually working. Does anybody want to buy it? I'm long at 84 and 3/4. I'll put an 86 and a quarter sell order. Does it get taken? Is anybody willing to buy one measly crappy micro contract at 86 and a quarter? No, they're not. So what do? I move my offer down to 86 and see if I get taken out at 86. If I don't, I can just get rid of this. I can just hit sell bid and be gone, right? You want to let it work a little bit longer? Let it work a little bit longer, right? It all depends on what you are thinking, right? I can see that there was an 86 quarter print, but hey, I didn't get it because I wasn't in line. Another thing I would do is say I was long 15, 20 contracts, right? I would put an 85 and 3/4 sell order out. And when that order gets taken, I know, hey, there's buyers, right? How do you find the balance zone? Oh, good question. There are, where is it here? There's a ton of videos on how to do this, Amiri. What day is it today? Tuesday? Every Wednesday, I do a 101 class, and the recordings are put in there. So basically, balance is what you're seeing right here, my friend. Check this out. This is a balance zone right here. Because what you're seeing is sellers here, and they stop selling here. And they're the same people. That's two-sided trade. Oh, somebody type L in the, where the hell is my mouse? Thanks, Mike. Yeah, so that creates a position. So if say you have a long view, you'll build a long position in this box, use the edges of it to manage your risk. And then, say I'm building longs here between 64, 63, right? If the market starts breaking lower, then I will start trimming those contracts, right? You got a sell order at 85 and 3/4. If that gets taken, I know, look alive, right? As soon as you are long, go put your sell orders in, right? So when the market does pop, you actually get out and you get paid. Don't you want to get paid? Right? You want to get paid, right? See? Out one at 85 and a half. Are they taking them at 3/4? I don't care. I'll sell at a half. That's fine. Half 3/4, right? If I'm long 84, right, and change, I'll sell them here. I don't care, right? I want to turn my inventory into cash, right? And I have to take what the market will give me, right? This way, I would rather make 3 or 4 points. I'd rather make 2 points on 5 E-minis than take a loss or hold too long, right? Flat, you know. I'm gone. Thanks for coming out. Yeah, it's your time setting, Buck One. I don't know if he's online, right? Built a position, sold it. You guys understand? Yes? No? Why did I go long? Because of this. Just watch the chart. They stopped selling here. Because, listen, if they don't need to sell underneath this level, then it's a long. But hey, why did I sell it here? Because I know there's other people competing, right? If I was still long now, I'd be like, oh, I got stopped out. You just didn't read the business properly, right? Just get paid. Because you never know what it's going to do, right? Look at that. It looked below 85 and came back up again. So now we know, we have confirmation, right? I made a couple of bucks, and now I know that there's a bid there. Because we just went in and tested that bid on that candle, and they came in hot and heavy. You see that? Does everybody see that? It's pretty cool, right? You don't need any DOM. You don't need any fancy software. It's a 1-minute candle. A little bit of common sense and the ability to pay attention, right? That's all you really need to trade. A 1-minute candle, a little bit of common sense, and the ability to pay attention. Okay? That's all you need to trade. Right? Don't let anybody try and sell you some fancy software or all that stuff. But now you can see the chart's telling you, hey, don't screw with it here, right? Don't mess around with it here. Don't go short. Don't go shorting just because it looks slow, right? You're starting to lose your sellers. You still have sellers, but they're seeing buying, right? And when those sellers are seeing buying, what do sellers do? They raise price. There you go. Oh, it's going to be a long week, folks. It'll get better after tomorrow. Tomorrow's going to be like, like one of those big soap opera kind of days. We don't know what's going to happen. So hopefully they lower interest rates. If they don't lower interest rates, just kind of watch yourself. Don't get caught up in don't get caught up tomorrow in the market at 2 o'clock. I might do a session at 2. We'll see. If anybody wants, we can do a session when the Fed comes on. Be like watching a big boxing match. Yeah, there you go, Raj. Enjoy the couch trip. That's not a bad movie. Walter Matthau, Dan Aykroyd. Thanks, everyone. Be smart out there, okay? Be smart. Wait for your opportunity, then take it. All right? Just be a little careful in the next couple of days. We should return to hopefully more normal markets next week or Thursday, Friday. Thanks, everyone. We'll see you soon. Come visit us at thetradingsyndicate.org. Learn to get practical and get paid. And all you need is a candle chart, a little bit of common sense, and the ability to pay attention. And we'll be able to help you. Thanks, everyone. Bye for now.